man, all that money just sitting around being eaten by inflation, do you think it comes into the equity market at some point?
Yeah, if past is prelude, Brian, the money will come in, somewhere around the top or peak in equity prices. That's the way it's always been. That's the way I think it'll be this time.
Where is all that money coming from? I mean, is it just central banks? The amount of cash in the world is insane.
Well, I think the American consumer is giddy with cash. They have more cash than they've had in a long time. And again, they're sticking it in a money market fund, which I guess is okay. I prefer stocks because I think we're in a secular bull market, and I think the secular bull market continues to play for the next few years.
For how I was going to say, Jeff, I mean, you've been bullish, and you've been right, by the way. The markets have soared the last couple of years. Realistically, I mean, what, 22 times forward earnings or whatever on the S&P 500? If you strip out tech, I understand it's a lot less, but if I had more hair, I might be Elvis. I mean, how long can this go on?
The typical secular bull markets tend to last 15 to 20 years. You can look at the 1949 to 1966 affair or the 1982 to 2000 affair. That one lasted 18 years. Are there pullbacks? Yeah. In the 82 to 2000, we had the 1987 crash, and a bunch of people turned bearish. I was not one of them, by the way. A bunch of people turned bearish, said we've entered a bear market. It wasn't true. It was just a pullback, a big pullback, I might add, in an ongoing secular bull market that continued to trade higher. And again, we're like 12 years into this thing. We ought to have at least another 3, if not another 10 years left in it.
Yeah, we're looking at a 5-year chart, and you can see this trend line. And by the way, one of your recent notes, you talk about the loss of a good friend. So our sympathies and apologies for the loss of a friend. No one likes to see somebody move on, but you use that as a reference to time and sort of, how people view things in their life and the importance not only just of life, but also if you talk about the markets, why do people seem to love stocks at their peak and hate them at the bottom? I mean, if you were smart enough or brave enough to buy stocks in 1977, you're probably, sitting with your grandkids on a giant yacht right now. How do we alter our thinking about the way we look at markets?
That's just the nature, the human nature of most markets, not just the stock market, but commodity markets, bond markets, etc. People hate them when they should be loving them when they're cheap, and they love them when they should be cautious at the peak, and that's the way it's always been. I've been in this business 53 years, and that's the way it's always been. And I've been looking at markets for 60 years, and that's just the human nature of the beast.
And using that 53 years of experience, Jeff, what do you see right now? Any parts of the market you particularly love? Any parts you particularly hate? And your quick thoughts on crypto?
Peter Lynch taught me not to invest in things I don't understand, and I don't understand crypto, so I have not really delved into it. I like financials. I like technology. I really like financials here. They're cheap, and my father used to tell me good things tend to happen to cheap stocks, and that's what we do at Capital Wealth Planning. We look for cheap stocks with dividends that have increased their dividend payments over the years, and we buy them. And strategically, we sell out of the money covered calls against not all of them, but partial positions of them. And it's a real good income strategy for somebody that's my age. I'm 72 years old, and I'm looking for income, and that's what we do at Capital Wealth.
Shepard Smith here. Thanks for watching CNBC on YouTube.